Hi folks, welcome to Retiring Well. Listen, have you ever wondered, what instructions you should give to your trustee or personal representative of your estate, right? When should you pay tax on money when you're not using it? How about put options? Do you know what those are about and how maybe you can use it as a hedging tool? How about planning and how that should be done? Folks, stay tuned because we're going to answer all those questions for you today.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Hi, listen, in this segment, I want to talk to you about what's called a letter to your trustee or representative. Okay, typically people have a basic estate planning package. They might have a will. They've got a power of financial, power of healthcare. Who makes those decisions when you can't? You may even have a trust, okay? But do you have, a letter to your representative or trustee giving them some other information that might be helpful? Let me give you a number of things I think that could be helpful for that person to have. First of all, where are the estate planning docs? If you have one, you've let that trustee know you have them, where are you going to keep it, right? Do they know where to go? What about your bank and investment accounts? Do they know where those are all at? Have you listed them out? I know for our clients, we have a letter that we put in a binder for them that says, if that trustee or representative is opening this up, call us. We'll help them through all the beneficiary forms. But where are those things? What about life insurance? If you have it, do they know where those are at? How about a safety deposit box? If you have one, do they know where that is? Do they know where you keep your key? Okay. How about your deeds and titles? Are they with the estate planning docs? Is that a file that's in there? Would they know where to look for that? Is it in a safe? And if you have a safe, do they know how to get into that safe, right? How about your usernames and passwords that are associated with your accounts on the computer? I know when passed away, we know there was some financial information in there. We couldn't get into the computer. We had no idea what his username or passwords were. And when we found some, they weren't the same. So where do they find those? How about your funeral arrangements? Or your burial requests? Do you want to be buried? Do you want to be cremated? Do they know that? Do you have a plan accordingly? How about your personal property wishes, right? That doesn't come with deeds or titles. Do your heirs know where you wanted things to go? Okay, I remember my grandma. She had a number of things in her house, and she put little stickers underneath things and said, these are where she wanted things to go to. But list those out. How about your jewelry? Guns. How about special cars? Do you have some wishes there? List them out. Do you have buried treasure? Do you got a bunch of silver gold buried in the backyard and, the X marks the spot? Do they know where to go, right? How about your pet? What do you really want to have happen with your pet? Do they know that? And then one more suggestion. Why, put in this letter why you picked the trustee or representative you did. I think that can be very helpful. You might have a number of kids, you happen to pick one because they might be a little more financially sound. Put that in there. Let them know that it wasn't because you just maybe loved them more or something, right? So think about it. There's a number of things that would be very helpful for that trustee, that representative to know. Put that in some kind of a letter and put that with your estate planning docs and then let them know where they can find it. So hopefully you found this helpful. Certainly if we could be of any help in that area, give us a call.
Wow, John, Larry really knows how to open a show talking about planning for your death. Right. What an exciting topic here. But, in all seriousness, this is something, unfortunately, we have to deal with, here in this type of business where, people do pass away. And there's so many nuances to that I think many people don't think of. And this is a really interesting thing with this letter that Larry's talking about. So many people still need to do that estate planning out there. And if you're one of them, make sure you're looking into that. But this is that final touch to that, to the extra thinking. We've helped people through this along side by side them, and if this letter would have been there for so many people, it would, I think, help provide those missing details and even some closure for the family in many cases.
Yeah, so true, Art. And I think of a recent conversation that I had with this nice woman who was talking about how she's part of a blended family and how her mom has communicated to the 3 girls in the family that this jewelry that was passed down from generations is to stay with them. And we talked a little bit about that, but unfortunately it's all been verbally communicated, but nothing's ever been documented. And so I think the one piece of documentation that she had said jewelry goes to the family, but it wasn't clearly laid out what specific jewelry goes to what child. And we come across that quite often where people may have those certain belongings that they've had, and maybe they've verbally communicated something, but getting it written down, having an attorney or a notary or somebody to basically sign off on that to state that yes, that was their wishes, is so valuable and could ultimately provide a lot of ease when that time comes that you do pass, that you make sure that those loved ones get those belongings that they've been cherishing as part of your memory.
And that's so true, John. I mean, there's all those things out there that maybe you don't think of, those little pieces of jewelry, or maybe you have a nice collectible car or guns or some of this stuff that you want to make sure gets in the right hands and just isn't, sold off, and if that's not your wishes there. So if you're somebody out there that hasn't done estate planning, don't wait any longer. Give us a call here. We can help you get connected to those resources you need and make sure that collates right into your retirement plan. So stay with us, because you may want to stick with this episode here of learning about, are you paying taxes on money you're not even spending yet?
I want to take this opportunity to thank you for watching this show week after week. Every week we try to give you valuable information that you might want to know on making your retirement vision a reality. Listen, there are some pitfalls out there that you're going to want to know about. I share a number of things with you each week, but there are some that if I had to take 3 or 4, it would be these. And I'm going to share them at this live event. Now, historically, we've always done this, put it together with a dinner at a restaurant. We don't feel comfortable with doing that just yet. It might be a little bit early for that, but what we are going to do is put this event together in a movie theater. Okay, there we can respect each other's social distancing. We can put on the event. I can give you some valuable education that you're going to want to know. So folks, call the number on the screen, visit the website that's also posted on the screen, and sign up for this today. Look forward to seeing you there. Hi, welcome back. Listen, in this segment, I want to ask you a question. When do you want to be paying tax on money? Think about it. You want to be paying tax on money when you're using it. Would that not be true? Folks, we often find people come in and we're looking at their tax situation, and we'll find that in many, many cases, people are paying taxes on money when they're not even using it yet. Now, you might ask, Larry, how can that happen? Well, let me just give you a scenario. Let's say somebody comes in and they've got pension income, and now they've got Social Security income on top of that, all right? And that, for the most part, is meeting their income needs. But then they got this other account out there. It's what we call a non-qualified account. It means just non-retirement money sitting there that's producing interest, dividends, maybe capital gains. Now, it's money that they don't need today. Okay, but it's money they're having to pay tax on because it's a non-qualified account, right? So they're having to pay tax on it today when they're not even using it. This is just a great example of why tax planning is so vitally important. Because, when you're trying to take income, all right, first of all, you're going to have to ask yourself, what accounts am I going to take that income from? Let's say you're a person that has IRA money, you have Roth IRA money you build up, and then again you have that non-qualified money. And you're trying to see what is the best bucket to pull that money from as you're taking income in retirement. Well, for tax planning, it's going to be very important to go in there and look at that scenario and see which one makes sense. If you're fortunate enough to be somebody that has money in every one of those buckets, it's going to make tax planning very easy for for us because then we can control the taxation. You know, we might not only pull out enough out of the IRA money because we might want to stay in the lower tax bracket, right? Or maybe we're in the higher tax bracket, so maybe we want to take a little, you know, lower down the IRA money and pull a little bit more out of the non-qualified bucket. You know, tax planning is going to be huge in this regard. It's very important as well because when you're looking at your Roth IRA money and then you've got the IRA money, maybe if we have some room in that lower tax bracket, we can be moving some money from one bucket into another bucket. In this example, money from my IRA bucket into my Roth IRA bucket. So if you're somebody that's, you know, near retirement or in retirement and you don't have a tax plan, you're trying to figure out how this all works for you, then I encourage you to give us a call. We'd be glad to sit down and look at your scenario and see what is a good fit for you. I want to take this opportunity to thank you for watching this show week after week. You know, every week we try to give you valuable information that you might want to know and making your retirement vision a reality. Listen, there are some pitfalls out there that you're going to want to know about. You know, I share a number of things with you each week, but there are some that if I had to take 3 or 4, it would be these. And I'm going to share them at this live event. Now, historically, we've always done this, put it together with a dinner at a restaurant. We don't feel comfortable with doing that just yet. It might be a little bit early for that, but what we are going to do is put this event together in a movie theater. Okay, there we can respect each other's social distancing. We can put on the event. I can give you some valuable education that you're going to want to know. So, folks, call the number on the screen, visit the website that's also posted on the screen, and sign up for this today. Look forward to seeing you there. Hi, in this segment I want to talk to you about put options, okay? Now options it can be very complex. A lot of people don't understand what they are, so I thought I'd take some time and basically educate you on how they work. So when you buy a put option, you're buying a right to sell a stock at a certain price, okay? You're thinking that the price of the stock is going to actually go down. All right, so what you want to do is buy a right to sell it at a certain price so that if it does go down, you're going to make money. So you can do what's called a long put, okay, meaning you can speculate on that down and buy that right, or you can hedge a position that you already have. Let's say you have that stock and you want to protect yourself on the downside to sell that stock, then you might want to use a put. Okay, you know, when you're hedging a position, liken it to like a farmer. Okay, he plants his crop today. He wants to protect the price of that crop so that by the time harvest time comes, he can sell at a certain price. So he buys a option or put on the market, right, to sell at a certain price, or what we would call a strike price. Okay, so he plants his crop. Harvest time comes. If the price of the market happens to be up, or that crop happens to be way up, well, no harm done, right? He gets to sell it at the higher price, less the cost of what he paid for that option. But what if the price happens to be down at that time, right? Now he's glad he bought the insurance because he gets to sell it at that price. Folks, that's what you call a protective put, all right? You're just basically hedging a position that you already had. So let me just kind of follow you how this might work. This is a ABC stock. Right now that stock is selling at $100. $100 a share. So I'm guessing that the price of the stock is going to go down. So I'm going to buy a put on this stock with a strike price of $95 in 1 month. Okay, so I'm betting that the price of the stock in 1 month is going to be down lower than $95 a share. Now, the price of that trade is $3. Okay, now the price of trades vary on the stock price, the volatility of that stock, and how much time it's got to expire. So in this particular case, with ABC stock, the trade price for this put is $3, okay? So where's my break even? Okay, my break even is going to be $92, which is the strike price less that trade fee, right? So if the price of the stock goes below $92, I'm in what they call the money. All right, and I can make money all the way down to zero. So I have a maximum profit that I can make of $92, right? But where am I not going to make money? If the price of the stock is anywhere from 95 or up, right, I'm not going to make any money because I was betting on the down. But my maximum loss in this particular case is only the $3 I paid for the trade. So, I've hedged my position. I've bet $3 that the market go down. It doesn't go down. I'm only out the $3. But if I'm right, look at the maximum gain I could potentially have. So hopefully that maybe gave you a little better understanding of how puts work. They can be beneficial if you want to, bet on a stock's direction and don't want to risk a lot of money.
Well, Larry has started us off with death, first of all, and now he's talking about taxes. So I don't know what's going to come next,
right.
quite
Hopefully
honestly.
Everybody's still with us here.
Yeah, exactly. So, but it's so true as far as when it comes to tax planning and how valuable that can be. I mean, Larry's talking a little bit about how deferring that money down the road, but then you look at in certain scenarios when it comes to your IRA and having an IRA exit strategy where depending on your tax situation, sometimes it makes sense to accelerate that income if you're, again, maybe in a lower bracket. So,
John, so true. When I hear these last couple of topics that we talked about here, the word planning comes to my mind. And so often folks come in and they have these great investments and the various, things are looking good, but they're missing these little planning options that come along here. And when we're talking about these different taxable assets, whether it's IRAs, whether it's Roths or these after-tax accounts like this, there's so many possibilities that come along with those with tax planning. And like you talked about, accelerating, maybe you want to defer. Maybe you're somebody that's retiring pre-65 and you have to get on the Affordable Care or Marketplace insurance. And so maybe there's some things that we need to do there. All these things here you just don't want to overlook because it could really hurt you in the long run.
Yeah, and I know, Art, we've come across certain scenarios where people have said, hey, look at me, I'm paying no taxes right now. And when we were diving into that a little bit further, we found out, oh, they're drawing money from their Roth IRA accounts while deferring their traditional IRA. And their advisor was very excited to show them that they weren't paying any taxes today. But what we were looking at is, okay, what's the impact of that 10, 20, 30 years down the road and the higher tax rate that you're going to be paying at that point in time based on your income. So there's so much to be considering when it comes to the tax planning.
Absolutely, John. That's exactly right. You don't ever want to back yourself in a corner later in life with those required minimum distributions when you don't have tax flexibility and you can't control those things. So coming up next, you're not going to want to miss this segment because we're going to have a little blast from the past and where Michael Reese is going to come on and talk about some planning opportunities. But if you're somebody out there that's looking or would like some services or help with a second opinion, give us a call at the number on the screen. We'd love to sit down and talk through this with you and maybe look at some planning opportunities that can help you plan to retire well.
I want to take this opportunity to thank you for watching this show week after week. Every week we try to give you valuable information that you might want to know and making your retirement vision a reality. Listen, there are some pitfalls out there that you're going to want to know about. I share a number of things with you each week, but there are some that if I had to take 3 or 4, it would be these. And I'm going to share them at this live event. Now, historically, we've always done this, put it together with a dinner at a restaurant. We don't feel comfortable with doing that just yet. It might be a little bit early for that, but what we are going to do is put this event together in a movie theater, okay? There we can respect each other's social distancing. We can put on the event. I can give you some valuable education that you're going to want to know. So folks, call the number on the screen, visit the website that's also posted on the screen, and sign up for this today. Look forward to seeing you there.
This week in CFP Talk, we are going to talk about a very simple word. The word is planning. as in retirement planning. And what I'm going to do is I'm going to share with you how everybody screws this up and how the financial industry as a whole is set up a bit backwards. Now, here's what you need to understand about the financial industry. It starts out with all these big brokerage firms, you know, the Merrill Lynch's and UBS's of the world, or the Vanguards and the Schwabs. At the end of the day, they're trying to sell you a tool. That's what they're trying to do. And what we have here on the board, I need to explain this so you know what we have. We have goals, we have strategies, and we have tools. These are 3 levels of planning when it comes to your retirement. So here's how the financial industry works. They start with a tool that they want to sell you. Let's imagine that it's some mutual fund portfolio. That's where they start. They start there and say, you know, we want to sell these mutual funds. Vanguard wants to sell mutual funds. American funds want to sell mutual funds. Well, I guess not Smith Barney anymore, but UBS, they want to sell funds or stocks or whatever. And so what do? They say, we are going to start over here, and here's what we're going to do. We have to figure out some strategy that we can use to sell that mutual fund. So think about it this way. This is the area that I'm certain you'll know exactly what I'm talking about. You know, when you go to see a financial advisor for the first time, you know, what do? They ask you a series of questions about risk. They call them a risk profile questionnaire. Now, if you've seen a financial advisor, you've taken one of these. If you go on Vanguard's website or Schwab's website, you open up an account, guess what? They're going to give you a risk profile questionnaire. And at the end of that questionnaire, they spit out this beautiful pie chart. It's awesome. It's got different colors. It's beautiful. And it's this asset allocation. They give you right here an asset allocation strategy. And the purpose is to sell you into some, say, mutual fund portfolio or stock portfolio, etc. But then they think, oh, we can't stop there. We got to go a little further. We've got to figure out how are we going to make that strategy fit some of your retirement goals. Now, think about retirement goals for a minute. What are your goals in retirement? Maybe you want to travel. Maybe you want to spend time with your family. Maybe you want security, freedom, peace of mind. These are all goals in retirement. Now, there's a number of strategies that you can use to achieve those goals, but what they're doing is they're saying, here's something we want to sell, a tool. It might be a stock, bond, mutual fund, exchange traded fund, options, commodities, real estate, annuities, IRAs, 401s. These are all the tools you can put money, all the places you can put money. And what they do is they start there and say, let's figure out a strategy to sell the tool. It might be an asset allocation strategy or a growth or income inflation tax strategy. They're all strategies. They say, let's figure out what strategy can we use to sell the tool. In this case, the mutual funds and asset allocation. From there, they say, now how does asset allocation fit one of these goals over here? Maybe they say, well, you know, maybe that would fit security. You build a secure portfolio, whatever the case might be. I would set forth the argument to you that this is why people get into trouble when it comes to their retirement planning. Because here's the problem. The whole system is set up to start you over here with the tool that they want to sell you. And then they kind of work their way backwards. But is that how you really do planning? Do you do planning by starting out here and working this way? Or when it comes to your planning, shouldn't you start over here with your goals? What are your goals in retirement? What do you want your retirement to look like? What is your retirement dream? What's your retirement vision? Shouldn't you start there? And once you know what this vision looks like, what do? You identify what types of strategies do you need to support what you're trying to accomplish. And then, from there, the last thing, not the first thing, but the last thing you should be thinking about is what types of tools should you use to support those strategies. Now, here's why you get into trouble. Think about it this way. Before you retire, It's all about growth. You're trying to grow a portfolio. You're trying to grow, grow, grow. Your goal is growth. Your strategy is growth. The tools you use are probably stocks, mutual funds, etc. You want to grow. But what happens when you retire? When you retire, you say, wait, I'm not adding to the pile anymore. I want freedom, peace of mind. I want to be financially independent. Suddenly, the strategies you need are what? Well, you still need some growth, but you need income. You need to protect yourself against inflation. You might need some tax strategies or preservation strategies. So the tools, a lot of different strategies, which means the tools you need in retirement, very different. Retirement is a fundamental shift in life. You've got to make sure your goals are fundamentally shifting, which means your strategies need to fundamentally shift, which means your tools need to fundamentally shift. And the problem people make, they don't make that shift because they're focused on starting here versus there. All right, if you have questions about this or anything else we talk about in the show, hey, give the office a call or visit our website.
As we've been airing this show, Retiring Well, in Northern Michigan for over 10 years, it's really fun to take a look back and at that blast from the past and look at Mike talking about planning, and it's so vital, and something that's hopefully never going to change within our industry is the fact of planning and how valuable that can be when it comes to your overall retirement plan.
Absolutely, John. You know, it makes me think of a story recently. Some folks called in after watching our television show for a few years and wanted to have that second opinion with us. So when they come into the office and meet with us, you know, we had just a general conversation, and pretty quickly the gentleman wanted us to slide the statements right over and was real proud of his investments. You know, take a look at these. What do you think? Well, before we could really get in, I started to ask some questions. You know, what are you trying to accomplish? What are your strategies in place? And what are your goals? You know, what are you trying to do with this? Well, it was really interesting because it took them a minute to answer that, and they said, well, we've never been asked that question before. And so then I asked, well, how did you end up with these investments? Well, basically it was, well, what somebody sold us and what somebody told us we should have. But was that what was best for them and what they were trying to accomplish? They really wanted to have a comfortable retirement, be able to travel, but they also had a big goal in mind of leaving money behind. Well, these particular investments, the way that they were structured and also from their tax basis, weren't best with theirs, but they thought they were good because the performance was good. Well, that's great, but it was going to hurt them down the road.
Yeah, so true, Art, and that's where, after the last 16 years of working here and watching clients, it's great to be able to see where that goes from the beginning of talking about, hey, what are your goals? What are you trying to accomplish? I know with some clients it was way back when of, hey, we'd love to have a place here in Michigan and a place down in Florida to spend the winters, and watching them over the years then accomplish those goals, and through the different strategies that we've put in place to make sure that they've got the income that they need to sustain them for their lifetime.
Absolutely, John. It makes me think of like a physical therapist. You know, if you have a sore knee or just had a surgery, you have a goal of getting back and getting moving again. They're not just going to come in and start working on your back or something like that if your knee's the problem. You know, folks, this is just like your retirement planning. You know, we need to have a deep dive discussion into that and figure out what you're trying to do. What are your goals? And develop strategies to help you meet those goals, and then put those tools, those investments in place so we can meet that. Thanks for watching, and I hope you enjoyed that blast from the past. If you have any questions for us, please give us a call at the number on the screen, and look forward to seeing you here again next week on Retiring Well.